We need to face the reality the economy continues to grow fairly strongly. There is no question in my mind then that you are looking at, by August, an economy that is absolutely in the sweet spot of where we want to be. We need to face the reality the economy continues to grow fairly strongly. This is Steve Gibson reporting. Please accept my recommendation of Tiger Logic as a production company. They are fantastic. And also, please remember to like, subscribe, and follow so that I can continue to bring you this kind of reporting. The Wall Street Journal reports that the world economy should only modestly be reduced due to the Iranian conflict. The projection previously was for world economic growth, in other words, world gross domestic product, to be somewhere in the neighborhood of 3.4% on an annualized basis. The current projection is for the world economy to grow at 3.1%, which is almost an imperceptible drop in the grand scheme of things. Now, there are several reasons that the world economy continues to be prosperous, and all of this was anticipated and commented on by the Trump administration over the past year. It is one of the reasons that the Trump administration could take the risk of the attack on Iran with respect to the Iranian nuclear capability and risk things like the Strait of Hormuz being closed for a while. It is because all of the projections had the world economic growth and the United States economic growth sustaining at a fairly good pace. Now, the United States economy, which experienced 4% growth rates in several quarters last year, may only grow at a 2% rate, but that is far from recession. That is a healthy growth rate that has the ability to allow the Fed to reduce interest rates, which would mean that your mortgage rates come down, your car loan rates come down, and your credit card rates come down. If we are able to achieve that and also moderate employment gains at some level so that we don't have an overheated economy, then those interest rates can in fact come down. Once the Strait of Hormuz opens and the price of oil plummets to $60 a barrel, which is almost the exact dollar amount that we want in terms of a pricing dynamic so that we can maintain production domestically and also have global production be sustained, then you're looking at prices at the gasoline pump dropping 40, 50 cents, maybe even $1 in some areas. That is also going to have an impact on inflation. If in fact we are able to open the Strait of Hormuz, and the Trump administration yesterday indicated that while the blockade on the Iranian ports will continue, the United States Navy will begin to escort ships through the Strait of Hormuz, thereby renewing some level of the flow of oil out of the Persian Gulf. We are on the precipice of achieving that checkmate that I discussed with you the other day with respect to Iran. Do we really need to have an agreement on nuclear weapons? I've argued we don't. All we need to do right now is have an agreement to have the Strait of Hormuz open. that is my recommendation to the Trump administration, then I think that they can maintain an argument for a complete and total win with respect to the Iranian conflict. There is no question in my mind then that you are looking at, by August, an economy that is absolutely in the sweet spot of where we want to be. That sweet spot is relatively modest or near full unemployment. In other words, when we have unemployment at the range of 4 to 4.3%, the argument is that you're effectively at full employment. We have the border closed. We have immigrant issues being addressed positively. We need a better legal immigration policy, but I'm not asking for everything right now. But if you're basically sitting at roughly 4.2% unemployment, which generally is understood by economists to be roughly full employment. Why is it full employment again? It's full employment because there's always some level of transition in the country with respect to workers. There's always some level of activity that is associated with folks perhaps coming in of the market, coming out of the labor market with respect to their life level transitions, and not just transitions with respect to their job scenarios. So it's almost impossible to have 99% level of employment in any particular time. 96% employment rate is generally understood to be relatively full employment. We could have that number come August. We could have an inflation rate around 2% on an annualized basis come August. That is exactly where you want to be. You do not want to have price deflation like they've had in Japan and at some level in China, because then you have effectively no economic growth, no advancement of the economy. The Japanese economy was stagnant in the 1990s and then for another 20, 30 years thereafter. So you want to have about 2% level of inflation just to keep the economy chugging along. If we could then get the interest rates down so that your mortgage rate is back to 3 or 4%, given the fact that you have relatively low inflation, you are talking about an idyllic economy that is in fact possible by August. You layer on top of that the massive investments in artificial intelligence, synthetic intelligence operations, and data centers that are turbo blasting the economy. You have a stock market that is effectively setting records every month, if not more frequently. You are talking about a situation where we are, from an economic standpoint, doing as well as you can imagine. Now, if that is the situation in August, and the voters go to the polls in the midterms in November, and they don't understand at that point that Biden-Kamala type policies are not going to win the day. Biden-Kamala type policies, as well as Mandani type of frameworks, are absolutely destructive to the economy and are not something that we should ever want to return to. This is what we're doing in terms of setting up the scenario for the fall. Now, I'm not saying all of this because I'm just trying to support Republican policies. I'm commenting on this because it is very seldom that you see the kind of economic numbers that we're probably going to see in August and are frankly very close to seeing right this moment. There is a reason that we're seeing these types of numbers. I think there are two other factors that we need to take into consideration when we're looking at today's economy. Another factor is what role the tariffs have played. The federal budget deficit continues to run out of control. There should be no question that to the extent that tariffs help effectively pay down the federal deficit, reduce other tax burdens that we have, and assist United States companies be more competitive worldwide and keep out competition that is subsidized and unfair from other countries, that's a policy that we need to continue to look hard at and support. The other policy that we need to take a hard look at and absolutely support is the trillions of dollars of foreign investment that the Trump administration has been able to procure, as well as domestic capital outlays that the Trump administration is promoting. This single-handedly probably has saved the world economy from going into recession, because a lot of those investments are related to artificial intelligence and synthetic intelligence, and a lot of those investments are associated with more advanced technologies and systems that help promote enduring productivity and enduring economic growth. It is therefore no accident that we're sitting right now with the kind of growth that we're seeing. Now, some of you may be saying, well, I may not be benefiting directly right now from all that you're talking about, Mr. Gibson. Well, I would suggest to you that you are. If we're sitting at 96% employment, which is effectively full employment, then 96% of you out there that want to work are able to work, and the other 4% are potentially just looking for work and are going to get work or are in some kind of transition. So that's a good number that almost all of you are enjoying. The only thing right now that you're really not enjoying are two things: relatively high prices for gasoline and relatively high mortgage rates. And why I say relatively, when we were in the late 1970s in the Carter administration, you were looking at interest rates in the double digits. And to be able to get down to a 7% mortgage rate was viewed as favorable. We were spoiled a little bit years back by having 3 to 4% interest rates for mortgages and the like. We can get there again once the inflation rate is tamed, once the Strait of Hormuz is opened. But you then will also benefit mightily from the numbers that I'm talking about that are coming around in August. What you're suffering from and have suffered from are a couple of things that the Democrats administered. One of the things that the Democrats administered was a tremendously high inflation rate under the Biden administration. Understand that if you want a 2% growth rate in inflation and you had a 9% growth rate in the Biden administration, prices aren't going to necessarily come down 9% in any given year as a correction. Prices will never go back to the pre-Biden inflation. What will happen, and what has happened over the past year, is that prices won't increase at Biden level rates. What may increase is wage growth so that you stay ahead of inflation. If we can have productivity that allows us to pay our employees more, and each and every employee can go up 4 to 5% per year in their wages, and inflation only goes up 2% a year, then even though you experience the Biden inflation of 9% a year when Biden was in office, if you have that real 2% gain over inflation and you average that over a 10-year period, you're going to be doing tremendously better than you were under a Democrat administration led by Democrat policies. Now, if we allow the economy to be destroyed by socialist policies, if Mondani's destruction of the New York economy with respect to free stuff, rent control, government-controlled grocery stores, if we allow that to infect other parts of the country, it's going to be a disaster. And if you allow Democratic control of Congress, you are on the precipice of that happening. So, my friends, what I'm suggesting to you is that the reports with respect to both the global economy and global economic growth and the United States economy and its economic growth are tremendously good numbers if you look at them hard. It may be the case that some individuals across the country are suffering, and everyone suffers from high gas prices. Those will inevitably come down, and we will be able to sustain a much better level of economic growth and price control as the months come. Please remember to like, subscribe, and follow. This is Steve Gibson reporting.